Hello and welcome to this March 20th, 2011 video version of InvestEd Central's Anatomy of a Trade. I'm Tom Bowley, InvestEd Central's Chief Market Strategist, and it's my pleasure to provide you this week's Anatomy of a Trade. This presentation is brought to you by StockCharts.com, simply the web's best financial charts. Today we are taking a look at Crosshair Exploration and Mining Corp. This is ticker symbol CXZ. This was a stock, very volatile stock, and a micro cap that we took a look at back on March the 8th. It was actually a chart of the day for March the 9th. This was a stock that was very close to price support right in here. You can see on this move up, and really since early September on this push to the upside, each one of these moves to the upside was accompanied by very nice volume. So we had excellent volume trends in play. And once we broke out above about $1.80 back in the latter part of December, you can see we held that level in late January, went back up, put it in an equal top, and then came back down. And what we were looking for was sideways consolidation from about $1.80 to around the 260 area. So we thought jumping in around the $1.80 area would provide us very nice upside, perhaps back to 260, while limiting the downside risk, because any kind of a close below $1.80, and that would be a sign for us to get out. Now actually that day, March 9th, which is when we put the chart, we actually put it out on the 8th for the 9th, the stock opened at $1.80 and then went down and closed at $1.66. So literally the day that we would have considered getting in was also the day that we would have been stopped out with about a 7.8% loss. And the reason we bring this up, number one, is we don't want anyone to think that we don't make mistakes and that trades are always winners. We know for a fact that there are going to be some that are going to be losers, and we have to be willing to take our medicine and keep our stops in play. One thing I think is really interesting here on this stock is once it broke down beneath this support level and closed at $1.66, you can see it was just 4 days later, the stock actually hit a low of 93 cents. So while certainly doesn't feel good to get into a stock $1.80 and get out at $1.66 the very same day, you can imagine that it would have felt a whole lot worse 4 days later at 93 cents. So we do want to make sure we keep our stops in play. We understand that trading involves making money. We like that, but it also involves losing money, and you have to be willing to be disciplined and take the loss and move back to the sidelines. Like I said, 7.8% loss isn't good, but at the same time, you do preserve most of your capital. You move back into cash, and you have an opportunity to get into another trade when one sets up. So we do want to always keep in mind that as we get into these stocks, that there are going to be times when they're not going to work out. The market is tough. You get into volatile stocks. This was, like I said, a $65 million company, so it was a very, very small market cap company, and they do tend to carry a lot more risk, so you have to be prepared for that as well. The Anatomy of a Trade is designed to communicate the trading style of InvestEd Central. We use technical analysis tools to determine the appropriate timing of entry and exit points on stocks to maximize returns and minimize risks. For more information on the types of services we offer, please visit our website at www.investedcentral.com. Again, that's www.investedcentral.com. Happy trading.